I'm Oliver Sloup with Blue Line Futures, coming to you from the Chicago Board of Trade with another episode of Tech Talk. We've got four markets for you today: corn, soybeans, live cattle, and lean hogs. Before we get into the charts, wanted to make you guys aware we will be on the Pro Farmer Crop Tour next week. The eastern leg of it, that starts down in Ohio, goes through Indiana, Illinois, Iowa, and then back up to Minnesota. If you are on those routes, feel free to reach out to us. We'd love to stop by and meet and greet you and see how your crops are looking. So without further ado, we'll get into the charts. We've got the December corn contract pulled up here, and we got a bit of a technical breakdown in today's session. And I think that started with yesterday's weakness, where we were just kind of treading water on the 200-day moving average, and we just weren't able to defend that in today's session. We broke below trend line support, and that opened the floodgates to fill this was previously a gap here on August 9th. This is a little bit of a pivotal area, 610, give or take. If we aren't able to defend this, we wouldn't be surprised to see the long liquidation continue, potentially take us back towards these lows from the beginning of August, 587.5. Below that, there's not a whole lot of support until 560. So the higher lows and higher highs might be coming to an end here in the near term, but that doesn't necessarily mean that we're going to completely crater and fall out of bed. Honestly, I wouldn't be surprised to see the market come into a little bit more of a trading range, call it 580 to 640. Now, I know that is a wider range on a historical basis, but looking at the volatility over the last year, or even 2 years for that matter, it doesn't seem like it's that far out of the question to be trading in that wide of a range going forward. Now, moving over to the soybean market, a lot of red on the screen here as well. Tested and held the 200-day moving average yesterday, but weren't able to get back out above that 50% retracement, which has kind of been a congestion area for us, not just here recently, but really going all the way back to February. We'll draw the line here. You can see that this has been kind of a pivot pocket for prices. This was where we broke out of in February, and previous resistance became support, and then the breakdown point. Now we're just kind of chopping around. Weren't able to get out above there yesterday, and some concerns over Chinese growth, as well as some beneficial rains through parts of Nebraska and Iowa, has sellers pretty active in today's session, breaking below the 200-day moving average, which we noted in this morning's Grain Express could take us back towards this gap July 26th. That is about 1348 to 1359 plus or minus. That's just kind of a rough ballpark estimate. But if we can't get ground back above the 200-day moving average, that is the next objective for the bear camp. Now, to negate the bearishness that we've seen over the last 2 days, the bulls really need to get back out above this 50% retracement, which seems like a long ways away, but as we've seen in recent trading activity over the last several months, it doesn't take much to put 50 or 60 cents on top of prices, or conversely take it off of prices as well. So just be sure to manage your risk appropriately, as we expect the volatility to continue here in the coming weeks as we inch closer towards harvest. Now, on the livestock side of things, we got a nice move higher in October live cattle today. Bounced off a trend line support yesterday, which was a must-hold area. Breaking close below here probably would have taken us back towards these moving averages, which are all converging together. Those come in about 141.50 to 141.90. But we didn't break down, so here we are. We're working back towards that gap that goes back to April 25th. We've been talking about this for some time. We like leaning on the short side up against this resistance level. And we've also got the RSI not in overbought territory, but definitely at the upper end of the range. You can see last time we've seen the RSI up at these levels, we have put in near-term tops. So I wouldn't be surprised to see the market maybe fill that gap, maybe run some stops and test these contract highs. But I think it's going to be a big ask to get a huge breakout move above that here in the near term. Cash market obviously going to be watched very closely. We have seen that pick up a little bit here over the past couple of weeks, which has helped us be constructive on the chart with higher highs and higher lows. But if cash stalls out, wouldn't be surprised to see the futures consolidate and pull back a little bit as well. So that's what we're looking at for live cattle. Now, wrapping things up with lean hogs. Lean hogs have been defying the odds here recently. Counter-seasonal move to the upside over the last couple of weeks, but really giving it all back in today's session. We got this new contract high on August 11th. We weren't able to get any follow through that next day, and today was the day that we just gave it all back. We made an attempt at those contract highs again, but couldn't get any buyers. So seasonality, and then coming back into play as funds have established a big net long position, relatively speaking, over the past several months. Weren't able to get any follow through on contract highs, so now you're seeing long liquidation and a potential retracement to this August 4th breakout point. So I wouldn't be surprised to see this pressure continue, take us back towards 95, which also comes in line with the 50 and 100-day moving average. So that's what we're looking at. That's what you should be looking at too. Again, this has been Oliver Sloup with Blue Line Futures. Remember, trading futures and options involves substantial risk of loss and is not suitable for all investors.